What if I told you that the Iran deal, which was just inked, is not just a diplomatic victory, but also a clever move to distract you from the real story, the hawkish Fed? Think about it, with the Fed's tone being super hawkish, no rate cut is expected anytime soon, and the first cut is not anticipated until 2027. That's a long time to wait, and it's going to have a significant impact on your money. Here's why that matters. The current Fed target is 3.50%-3.75%, and with the tone being so hawkish, it's likely that rates will stay high for a while. Now consider the current market conditions. The VIX is at 17.15, oil is at $73.9, and the 10-year yield is at 4.45%. These numbers tell a story of a market that's waiting with bated breath to see what the Fed will do next. The SPY is currently at $740.96, which is a pretty stable level, but don't be fooled. This stability is just a calm before the storm. The real question is, what does this mean for your investments? Should you be looking to get in or get out? And that's exactly the problem. Nobody knows for sure, but we can make some educated guesses. But there's a catch. The Iran deal is not just a sideshow. It's actually a significant event that could impact the markets. With oil prices falling to their lowest level since the war began, it's clear that this deal is going to have a major impact on the global economy. And let's not forget about the earnings reports that are coming out. ADBE just reported a 13% increase in revenue, but their stock is down 23% on the month. What does this mean for your money? Should you be looking to buy or sell? The answer is not simple, but one thing is clear. This is a great opportunity to learn from the market and adjust your strategy accordingly. Which brings us to the top earnings reports of the day. ADBE's report is a great example of how the market can be unpredictable. Despite the company's strong revenue growth, their stock is down significantly. This is a classic example of how the market can be disconnected from reality. Now, let's look at the numbers. ADBE's revenue growth is impressive, but their stock price is not reflecting that. This could be a great opportunity to buy, but it's also a reminder that the market can be unpredictable. Imagine you're an investor who's been following ADBE's stock. You would be scratching your head, wondering what's going on. And that's the trap. The market is full of surprises, and you need to be prepared. So, let's have a real debate. Is ADBE's stock a buy or a sell? On the bull side, you could argue that the company's strong revenue growth is a sign of things to come. On the bear side, you could argue that the market is just not responding to the company's positive news. But here's the thing, the market is not always rational, and sometimes it takes a while for the truth to come out. So, what's the right move? Well, that depends on your strategy and your risk tolerance. But one thing is clear. This is a great opportunity to learn from the market and adjust your strategy accordingly. What this means for your money is that you need to be careful. The market is unpredictable, and you need to be prepared for anything. If you're looking to get in, you could consider buying a call option on ADBE's stock, but you need to be aware of the risks. On the other hand, if you're looking to get out, you could consider selling a put option, but again, you need to be aware of the risks. The key is to have a solid strategy and to be prepared for anything. For example, you could consider setting a take-profit level at $80 and a stop-loss level at $60. This way, you can limit your losses and lock in your gains. In conclusion, the Iran deal and the Fed's hawkish tone are just a few of the many factors that are impacting the market. As an investor, you need to be aware of these factors and adjust your strategy accordingly. So, what's the right move? Well, that depends on you, but one thing is clear, you need to be prepared. That's why I invite you to join our community on Discord, where we discuss the latest market news and trends. We'll be watching the market's moves live, and we'll be sharing our insights and analysis with you. So join us and let's navigate the market together. Educational only, not financial advice.